Thank you so much for joining us for our joint webinar here between Coviance and Clear Capital. Our subject today is about efficiency and fairness in valuations in home equity lending. My name is Trey Perrott. I'm a AVP here at Coviance. And if you're unfamiliar, Coviance is a lending experience platform. Our goal is to help financial institutions be more efficient while giving a great digital borrower experience. Just on a Coviance note, we wanted to welcome a few of our newest partners, Gulf Winds, Bay First, Golden West, and Legacy. We're so excited to have a partnership with you, and we're excited to see what you're going to do here in the coming years as you continue to grow and offer a great experience for your members. So I'd like to also introduce Dan and Erica here with us from Clear Capital. Dan McAlister is the VP of Product, and Erica Vigen is a Senior Product Manager of Real Estate Analytics. And each brings extensive industry knowledge and expertise to this conversation. And I've been able to talk with them here over the last couple of weeks as we prepared for you, and it's been really insightful and fun conversations with them so far, and I'm excited to hear what they've got for you as well. So in today's webinar, we will have just a few quick minutes on the first few items that you see here. We're just trying to set the stage as we look at the average customer. And then we're going to jump into the helpful conversation with our Clear Capital experts to learn about fairness and efficiency in valuations. Just a couple of notes for housekeeping. This webinar is recorded, and we plan to send out a follow-up email with the recording for you. And then with contact information for both Clear Capital and Coviance. If you have further questions or you'd like to learn any more, we'd love to chat with you on that. But just so you're aware, that email will be coming afterwards, just so you can expect what will happen after this conversation. So what is the landscape in home equity lending today? One of the biggest things we look at is just in general, credit card debt. It's at an all-time high right now. It jumped up to $1.13 trillion as of the most recent data here in February 2024. Now, that's not the only consideration for home equity lending, but it is one of them as people are looking to consolidate debt. And we suggest one of the great solutions for consumers today to help their financial situation is home equity. Now, home equity is a wonderful way to build generational wealth. In fact, it's been considered throughout decades now that it's one of the best things you can do to build your own wealth, is to have your own home. And just for example, I ran the numbers on my own house, and to rent my house today would be almost double what I'm paying in a mortgage payment, almost double. And on top of that, it's not just the higher, less money in my budget each month. It's also that renters can't build the equity. They're not paying in to pay off that debt, and they don't have an asset that's, growing in its value roughly 3 to 5% annually, according to historical records. On top of that, today, Americans are sitting on $30 trillion, that's with a T, trillion dollars in home equity. Now, as of 2018, that number was 16 trillion. So just if you think about it, if you didn't own a home in 2018, that's now appreciated, you missed out on the opportunity to nearly double your equity, double this significant asset that you have. One expert estimates that each homeowner has an estimated 200,000 in tappable home equity today. And those numbers are just shocking, absolutely shocking to me. And obviously with mortgage rates being as high as they are right now, people are not wanting to refinance their mortgages. And it's for that reason that we're seeing home equity lines of credits, the searches for them on Google are at the highest level they've ever been. And I'm just going to take a side here. If you are not aware, you can actually access this information is publicly available for you. You can access your region, your state, your market, and see who's searching for what financial products on Google. I strongly encourage you to consider taking advantage of that opportunity so you can see what your potential consumers and members may be wanting in financial products. But you look at this, you see the opportunity in home equity, you see the demand for home equities at their highest level. So how do we summarize all of this information? And I want to summarize it with a friend. We'll call him Billy here. Billy is a good-looking dude. You can see him here. 2018, he bought a house that was worth $195,000. Today, that same house is worth about $329,000. And that's just mind-blowing right there. Let's say he was able to refinance a couple years into that mortgage. He's got a mortgage left of about $150,000. That's at 3% interest rate. And let's just say Billy wants to update his house because maybe his house is a little bit small, but he wants to finish the basement for the kids or something like that. He wants some of the money to go to the home update, some to pay off a little bit of credit card debt, and maybe that he wants to take a trip as well with his family. If Billy was to do that today, to do a cash out refinance at normal interest rates today of his primary mortgage, he would pay an estimated $279,000 in interest over the rest of that mortgage. 279. Now, if he kept his mortgage and just got a credit card instead, and then paid off that credit card under like a normal payment plan, you'd be looking at $169,000 in interest. A personal loan is at $135,000. And if instead he kept his mortgage, but then got a home equity on the side, it's $103,000 in total interest. Now, listen, just stop and think about Billy as a normal consumer. If Billy was completely committed to your financial institution and he reached out to you and you offered him, let's say, that cash out refinance, and he takes you up on it because he trusts you implicitly, he's not using the best financial tool he can to push his financial situation forward. He's just not. In fact, he might significantly be hurting his financial situation, tightening that monthly budget, all of those things. But the vast majority of consumers aren't only committed to you and your financial institution. So if he's an educated consumer who knows the opportunities that are available online and is being targeted by competitors of yours, he will find the best financial product elsewhere. He will. He's not going to, stay with you if he feels like he can get that home equity product quickly that will have him paying less interest and help to keep his budget comfortable. So how do we kind of summarize? What's the problem? Why don't financial institutions offer that product more aggressively? Well, as far as in my conversations with you, this is what I'm hearing. We know that there's a lot of competition right now for home equities, especially. Consumers are searching for them, and if you're not offering the product, they will get it elsewhere. And it's not just banks, other banks and credit unions you're competing against. It's fintechs now that, especially around home equities, that's where they're taking the most advantage of starting to creep into your consumers' wallets. It's home equities because they feel like that's an opportunity for them. So they're advertising to your consumers, your members, and they're trying to, offer this product to them. But on top of that, we know that home lending is generally very heavily regulated. And that's to protect the fairness in lending. That's to protect this a wonderful asset that many Americans have as they, try to build their wealth, their generational wealth. If you're treating a home equity loan like a mortgage, cost can be a huge issue. it can be very expensive to do this. And we at Coviance think there's a better option. We'd love to talk with you about that, how we can, constrict that. We're going to talk with Clear Capital about some of those opportunities as well here. And then just access. A lot of times, if you're treating home equities like the average financial institution, your turn times are 30 to 45 days. And these fintechs are offering same day approvals on HELOCs. So when you have that, it's hard. There's a lot of competition. There's a lot of problems with this product. How can we solve those problems? And that's why we have Erica and Dan here today. And I'm so happy to introduce them. Clear Capital is an excellent vendor on our platform, and they help with these regulations issue, the cost issue, the speed for the valuations in your loan processes. And I'm really excited for both Erica and Dan in this conversation. So I'm gonna open it up to them. I'm gonna start with Dan, if that's okay. Dan, tell us a little bit about Clear Capital's products, and tell us about how Clear Capital helps to promote fairness in lending, especially in their valuations here.
Yeah, thanks so much, Trey, and to the Coviance team for having Erica and myself on. As VP of product at Clear Capital, one of the things that I've worked on throughout my career is modernizing the valuation experience for lenders and for consumers. And so, what does Clear Capital offer? So to put it simply, we have a menu of solutions to tell you what a home is worth, but also inspection solutions to give you ground truth of what are the current, features, characteristics, and condition of that home. So those products include, appraisals, obviously, and then broker-based valuations like BPOs and evaluations, but also automated valuations or Clear AVM, which Erica is going to educate us all on as our resident pro on those products. And so, as well as, property condition inspections, post-disaster, things like that. And so we've been really heavily investing in modernizing valuation. And so that's definitely a buzzword out there right now. What does that mean? Let's unpack that a little bit. You hear appraisal modernization everywhere right now. And appraisal modernization, valuation modernization is really about bringing more efficiency, consistency, and equity to the process. And it's not necessarily about just replacing appraisers, but it is about using appraisers on the highest value types of transactions. It is about looking at the risk of the lending decision and using a cascade of products to evaluate what's the best solution for the decision that I'm trying to make right now. And so I'll start, when we talk about fairness, particularly in the appraisal process, there's certainly a lot of industry focus across regulators, GSEs, lenders, and AMCs like Clear Capital around, removing bias from the process. So, whenever we have a human being doing anything, there is a risk of either, unintentional implicit bias or intentional bias being injected in the process. And so there's a number of things Clear Capital is doing to, mitigate that risk. Recently the GSEs, for instance, have implemented risky text flagging, subjective text flagging in UCDP. Well, Clear Capital's been doing that in all of our appraisals and broker price opinions since the early 2010s, right? So that's going to automatically flag for our QC department when certain words or phrases are used that indicate perhaps some subjectivity or biases in the process. And so we've been doing that for a long time. And so you got to pair that the analysis of potential subjective analysis with very data-driven analysis of the value itself. And we source in a compliant way an abundance of property data, and then use that property data to drive machine learning based analytics to assess valuation accuracy. So every appraisal we do, every broker price opinion we do is going through this rigorous set of analytics that's going to seek to identify over or under valuation, potential neighborhood discrepancies in values, because at the end of the day, we just got to get that value right. And Erica's going to go into much more detail in how our analytics are derived and how to use the AVM specifically. But really taking this heavily data-driven analytics approach to valuation quality is kind of like a pillar of what we do in our valuations. The other piece of it is accessibility. Like borrowers in more urban areas tend to have access to cheaper and faster solutions, just because of the abundance of data and more, professional services companies serving those areas. But we've really made a big focus of serving outlying suburban areas, and rural areas with our valuation services. Make sure that like all communities really have access to accurate valuations. And we do that across our human-based valuation services like appraisals and BPOs. But also, Erica works really hard to make sure that AVMs have accuracy and hit rate coverage across a vast amount of the market. So we combine all of these elements to really make sure that the lender has options, and that they can trust that there's a lot of rigor going into fair housing compliance.
That's good stuff, Dan. Yeah, that's really interesting. I think the best place to go then is throw it to you, Erica. Let's talk maybe specifically about AVMs. I'm not sure if everybody who would be on this call may know what they are. So why don't you go ahead and explain what an AVM is, and how they assess the value.
Sure. And thank you so much for having me. I'm Erica. I'm the product manager of analytics products here at Clear Capital. And a little bit about AVMs. AVMs stand for automated valuation models. And, there are a lot of them. You guys are probably familiar with the ones that you see on online platforms as well. However, at Clear Capital, our automated valuation Clear AVM is produced with a supervised learning model. And this model leverages the market sale transactions that happen in a subject property's given market, as well as the property characteristics of that property and all of those sales that have happened around it in order to define what an estimate of value would be. So an automated valuation, as you can imagine, is available a little bit more quickly to you guys than some of these traditional valuation methods. And that's because it removes the element of human processing. The other thing, as Dan alluded to, is that the AVMs aren't impacted by a lot of the subjective assessments. And so we also are able to perform pretty rigorous testing on our automated valuations.
Yeah. Well, that's really good stuff, Erica. So you had mentioned something a minute ago about some of the data that's available online for evaluations. Could you explain maybe how your AVM is different than just like a tax assessment or some of the online data that's available to anybody if they just Google a property? Explain that difference there.
Sure. So related to tax assessments specifically, obviously, tax assessments are different across various jurisdictions. So, for example, I live in California. And so if you're in California, you know that tax assessments are staked at the time of purchase. And so they don't necessarily reflect the value of the homes that are like the market rate of those homes. And so also what we know about tax assessments is that they don't update nearly as frequently as the market changes. Mm-hmm. So it might not be a great number for you to base a valuation for lending purposes on. For this reason, Clear AVM and other lending rate AVMs, we update the valuation much more frequently. And so the other thing that goes into it is that there's just much more property data that's used. So the quantity of data, the various sources, not only exclusively the public records, but how frequently that information is updated. Clear AVM refreshes its values every single week. And so we are ensuring that the value is staying up to date with market changes. So each week as new sale transactions happen and we get more access to information about a given property or about its market, we're able to have our AVM stay up to date with accurate market trends and those property characteristics.
Yeah, that's really good. So we're going to show an AVM here in a few moments. We'll show kind of an example AVM, and that AVM will include something called that you call a confidence score on Clear AVM. Could you explain what that confidence score does and what it tells the lender?
Sure. So like I mentioned, an AVM uses property data and market sale transactions. But what happens in the case where we have some missing information, or there aren't very many sale transactions that are happening in that given market? The model is less likely to produce an accurate valuation if it doesn't have access to that information. And so the way that we reflect this to our customers and let them know, hey, there might be a better option for you to use a different method of valuation depending on your risk tolerance, because we don't have a high level of confidence in this specific home's valuation. So I would say that a reason why it's important that we call it for this specific home, and that Clear Capital performs really we're really quite proud of the way that we deliver these confidence scores, that it relates to a specific home, is because you can imagine a home that is dissimilar from the rest of the market. So if there's a home that has, 10 bedrooms and all of the homes in the neighborhood have, only 3 bedrooms, our estimate of value for that specific home would obviously it would be more challenging to understand what the value of that home is.
Sure.
For instance, that would have a lower confidence score returned from Clear Capital.
So it's what your number is, communicating that to the lender saying, hey, this is how confident we are in this valuation. And then the lender's able to use that number based off of their policies to say, well, we can use this number still if it's above a certain confidence score. Or, we'd rather go with another product, that could get us a better valuation on it.
Certainly. To fill in those gaps of maybe there is missing information, or we do need a little bit further analysis, farther than what the AVM is providing, as far as an understanding how would we value, 10 bedrooms in this neighborhood of 3-bedroom single family residences. Yeah,
that's a big family right there. Yeah, so Dan, I'm going to toss it back to you. In your experience, then, what are the benefits of an AVM for a loan team and for the consumer? When an AVM is used for the valuation, what are the benefits there?
Yeah, so I think it's important to think about kind of the manufacturing process of a HELOC loan or home equity loan versus like first lien origination, and like who bears the costs. Typically in first lien origination, the borrower is paying for the appraisal. They're paying for a lot of those kind of incremental services along the way. Sure. But Trey, to your point earlier, home equity lending is so competitive, and margins are slimmer, and you're competing for these smaller size loans. You're competing to keep your customer in your ecosystem, and as a result, a lot of times you see the financial institution bearing more of the costs. So instead of the homeowner or the borrower paying for the appraisal or the valuation services, the lender is putting that bill. So first, you've got this cost implication. An AVM is obviously a lot cheaper than a traditional appraisal or even a BPO, right? The other piece of it is just the speed. the other thing, going back to your first couple slides, is yeah, there are more and more fintechs, non-bank players offering virtually instant access to home equity, right? One day close, at minimum less than a week.
Yeah.
And I think it's important to remember you're competing against credit cards, like you noted, and as a millennial consumer myself, right? We just want everything right now. Give me that gratification instantly. Like if I've got to wait a couple of days or a couple of weeks, like you've lost me already.
Yeah.
So speed and cost for the AVM is like the two biggest drivers, right? And those decisions, lower balance, LTV is in a healthy spot. Like the AVM is going to allow you just to move with more confidence, faster, and keep that consumer in your ecosystem.
Yeah.
One other thing that I wanted to toss back to Erica before we get too far down the line is trust in AVMs. So we talked about confidence, but to tie this back to fair housing and fairness, Erica, can you fill in a little bit of the gaps of what we do for testing
Yeah.
and testing the impacts of our model changes?
Sure. So, the AVM complies to the same regulations that all other valuations comply to. And so, for example, we have a limited set of information that does not include, protected information inside of the valuation. And so we start with a set of data that isn't able to take a look at, any of these, information about protected classes or race, et cetera. So we start from the idea of the data that the model has available to it is, blind to that.
Yeah.
Then on top of that, the way in which we actually have our model running is blind to, some of the historically redlined, county and zip code lines that we have right now. The way that our model decides what a specific neighborhood is not tied to those geographic areas that were potentially defined by redlining. And so the way that we do that is by creating dynamic areas that our AVM looks for comparable properties. And then as far as, when we do make modeling changes, we obviously make sure that, as we iterate on our model and we're changing it, we make sure that the accuracy of the model is improving. But another thing that we do is we ensure that we're also testing for disparate impact. And so we look to see if the accuracy of our model differs based off of, the racial makeup of any of the geographic areas. And so we take a look and we say, is there a difference in performance? Are we undervaluing, in areas where we have, a majority minority population? And we only move forward with model changes when we meet criteria that we are not disparately impacting any groups.
That's really good. That's excellent stuff there. I appreciate that. And maybe for both of you, I think you touched on it here a little bit a moment ago, Dan, but either you or Erica, talk to us about how you envision this, an AVM product helping a financial institution to keep their consumers with them, consumer retention.
Sure. I think Dan was talking about this a little bit earlier.
Yeah.
As a lender or as a credit union, you have, a robust number of customers, and you also have, information about their loans in order to, be able to service them, especially in this competitive environment. An AVM can be leveraged not only for, the underwriting of a loan, but also to, create really targeted messaging to your existing customers. So to find out who might be eligible or who might really benefit from a home equity product, you can go through the list of, existing customers that you have and create a calculation of how much equity is outstanding for each one of these customers based off of the loan value that they have right now, the amount of principal that they still have to pay down, and the AVM updated value. The benefit, I would say, of using a lending grade AVM in that specific up funnel process is that you're able to present to your customers a value that is going to be the same one likely that they would be able to underwrite with, meaning that you can supply them with a more reliable offer and that they're more likely to convert, and you're not in essence wasting your time, energy, and resources when somebody might not be eligible based off of the reliability of the valuation.
Yeah, that's good. We call those bulk AVM orders here at Coviance. Can you imagine being Billy and I was thinking about maybe one day finishing my basement like that, so I got more square footage for my kids, and all of a sudden my financial institution sends me a letter saying, hey, we estimate your value to be at this, or somebody gives me a call and says that, I'm much more likely to be like, yeah, let's move forward. I've got access to this money. I don't have to mess with my 3% interest rate on my mortgage. Like, that'd be great.
Yeah, and for that customer trust as well, being able to supply somebody with an offer that you're able to then, live up to, I think that's a huge way to earn the trust of your customers, and be able to retain them for even longer than this given transaction.
Yeah, absolutely. That's good stuff. Dan, I think you had mentioned earlier, maybe it was you, Erica. I don't know if I remember or not, but I think you had mentioned a cascade of products a few moments ago. And by the way, audience, in a few moments, we're going to do Q&A live. So if you have questions on anything that Dan and Erica are saying here, I invite you to put your questions there down below, and we'll see if we can get to them here in just a few moments. But Dan, you were mentioning about the cascading technology, being able to move from AVM to like a BPO or something. Tell us a little bit more about what you're seeing as a trend in that.
Yeah, so I'd say the valuation industry as a whole, not just HELOCs or first lien origination, is moving more towards this paradigm of a risk-based continuum of products, right? So you look to like, what are the GSEs doing? Well, the GSEs have now appraisal waivers, which is basically an AVM. They've got inspection-based waivers, which is an AVM plus an inspection, and then hybrid appraisals and then traditional appraisals, right? So it's actually been going on in the home equity space a lot longer, using these types of risk-based continuums, right? So what we see more and more home equity lenders doing is start with the AVM, get that back really quickly, and determine whether that value has a confidence score that meets the right thresholds, as well as meeting the consumer owner estimate of value, or at least being close to what they expected. From there, perhaps there's you want to get a property condition inspection, a quick drive-by to confirm the condition of the home. That gets into some of the FIREA compliance stuff that we can probably get into here in a little bit. But then cascading ultimately up to a traditional appraisal, right? And so it's not a one size fits all. It's a go through this process to figure out, to land on the most inexpensive, fastest, trusted valuation solution that you can, right? And that's why Clear Capital provides this full suite, so you can really step through it. Now, there's still a lot of home equity lending that's using a traditional appraisal, and sometimes the consumer wants that. That's fine. There's nothing wrong with that, right? But I saw a recent webinar that had some representation from MBA, where they gave a stat that in 2023, about 40% of home equity originations were done using an AVM. And that is up from about 30% in 2018.
So
So that's the trend, right? The trend is to rely more heavily on AVMs and cascade up to traditional appraisals when you need to. So it's by no means like a new novel approach, but there's still 30-40% of home equity transactions that are using a traditional appraisal, and a good chunk of those probably don't need to. And in this increasing competitive environment, using a solution like Coviance to help you manage that cascade is really going to, give you a leg up, or at least allow you to compete with some of these, fintechs or other banks really moving towards, speed.
Yeah, I appreciate that, Dan. I think it might be beneficial to just show a little bit. We talk a lot about it here, but actually showing I'm an experiential. I want to see it to make it make sense to me to click. So if it's okay, I'll show just real quick what we're talking about here, and then I can show an example of a AVM, and hopefully that'll help put some meat on this to help you understand it. This is a workflow from one of the files. It takes roughly in the Coviance system a couple of minutes to create a file, start a workflow, and have that workflow run to complete these steps for you. And you can see everything that's needed to process this loan is along the side. But we want to focus here on the valuation. I want to show you how the Coviance technology does that a little bit. If you look down here, you click Start Workflow. It's going to set up the borrower portal, which is where we collect documents, and the borrowers can upload documents and sign docs and things like that. We're not going to show that here today, but then it would order the Clear Capital AVM here. And this is what Erica was talking about a moment ago. Did the AVM return a value at all? Is the first thing that it checks. And if it didn't, then we're going to follow, it would automatically follow this over here to order a full appraisal instead. This could also go over to order a BPO instead. But this is to get, if the AVM doesn't hit, then we need a different product to get the valuation on that home. If it does hit, but the confidence score, like Erica was talking about a moment ago, is below 80, then again, in this demo environment, it would flow over here to the full appraisal instead. Now you can set that at whatever number you want. If you're lending at 80% CLTV, an 80 confidence score is still fairly risk adverse, honestly. So that's a fairly safe number. And then it flows down here, and it's going to double check the CLTV with the first mortgage plus the requested second over what the value that was returned on the AVM. And if it meets your CLTV guidelines here in our demo environment, that's 80%. It flows down and continues to order everything else that's needed for this loan. If it doesn't, then it goes over here, and you're able to have an interactive step in here where you can decide to either offer a lower dollar amount to that consumer, or counter offer or something like that, or maybe offer to order a full appraisal at that time. But this is a little version of that cascade that Dan, you were talking about there, where it reads the AVM, and if the AVM isn't hitting the confidence score that you want, or that you need for your underwriting guidelines, it triggers the full appraisal automatically there. And then this is just an example of that AVM. Erica, do you want to walk us through this real quick? Real high level on this?
Sure, absolutely. So inside of this PDF report that's returned, obviously we have some imagery up at the top that shows the actual property as well as the property on a map. You have underneath of it an estimate and the date that estimate is for. We typically like to say that our estimates are valid for a 30-day period. And additionally, there we have the confidence score on the right-hand side. So that number that's underneath of confidence of 92% is our forecast standard deviation. If you guys have any other questions about that, Clear Capital is so happy to be able to answer any of your questions about confidence score or forecast standard deviation. We're really proud of ours, and we'd love to to hear what you guys are seeing as users of the AVM related to confidence score. We also have property details and a bunch of information and context that can support the evaluation. So this is something that I would say is pretty important here. I did see that there was a question in the Q&A that I think now is a good time to address.
Sure. Yeah.
The question is, in the event that the public records information and the MLS information is different, how does the AVM handle the valuation when there are those types of discrepancies? And so here inside of this report is, a really great example of that inside of the bathrooms. So for example, and also marginally with the gross living area. So of course, there are going to be, not only just discrepancies in, errors of how information is input, but also changes that happen to a property over time. And the update of that information that's flowing through, could be like one step away from each other. So, for example, here we can see that the public records has 3 baths and 3.5 baths, and the MLS has 2.5. Now, how Clear Capital manages those discrepancies internally, I like to consider some of our secret sauce. And so how the AVM is selecting each one of the most reliable of each one of these data points is something that we work very hard on to make sure that our estimates are leveraging the most recent and the most reliable data in calculating our AVMs. So obviously we have to figure out, all right, which bathroom count should we be using in this valuation? And we do consider, recency and reliability of the source in doing so.
Very cool. That's a perfect segue here.
Yeah, the rest of the document, includes also comparables. And so these are the sale transactions that have happened inside of the market, as well as listings, properties that are currently for sale. And inside of our reports, they're ranked by our proprietary comp ranking algorithm in order to say, which properties we believe to be the most similar. And so all of this information can help support the valuation. So if you provide to, your team just a number, perhaps the AVM, you would go, why? And so you can take a look through the report and understand what is the information about this property and this market that justifies that valuation. And you can find that all inside of the PDF.
That's really good information there. That's really helpful. Well, we're going to open it up for a few questions here before we wrap up toward the end. If you have any questions, please be sure to put them in the chat below. I think there was a question about the bulk AVM order for targeted marketing, which is something, Erica, you had brought up a moment ago. That pricing, if you're working with Coviance, I'd encourage you to talk with your relationship manager on. We're happy to do the best we can on that because we want to see your volume and your credit union and our bank continue to grow. So, talk with us on that. We're happy to work with you to make it make sense. The other question that came through here that I saw, and I think this is probably an Erica question. This is your expertise, was they're interested to know what you consider a high confidence score for an AVM.
Sure. So I guess I would say as a creator of an AVM, I don't think that I'm the right body to answer this question. The right group to answer the question of what is a high confidence score is actually the end users of the valuations. And so that would be, for example, the investors or purchasers of the loan, those who are relying on the value if you're holding them on your books. It is all dependent on your risk tolerance. However, I will mention that, inside of the workflow, as you noted, it says, did the AVM return a value? And that's because at Clear Capital, we do have a default threshold of a 70% confidence score that by default, we don't deliver AVM values below that threshold unless, requested to customers, because that's our default threshold of 70%. So you'll see that AVMs being returned to you will not be below 70% through the Coviance platform. However, for the purposes of, your bulk files or for interests in targeted marketing, you can also, request confidence scores that are, in a wider frame in order to obtain a higher hit rate and haven't, receive more estimates.
That's a great answer. I feel like everybody's asking you questions, Erica, here on AVMs, which is more your field versus what Dan's field typically is. We've got another one here on manufactured homes, and sometimes AVMs not pulling comparables for homes that are manufactured. Curious thoughts on that.
Sure. So obviously our ability to pull comparables is based off of the availability of comparable sales that are in the surrounding area. So for a property where there aren't, a lot of that specific property type that have been sold, obviously the comparables that are going to be offered are going to be more limited. We can continue to look in a larger geographic area for those sales. However, the other element that could potentially, make manufactured homes less available is just that sale information, not being something that we're picking up on. I will go and take a look at that. However, I do think that it's just the mere fact that likely in those areas there are less manufactured homes that are for sale. And so we filter for property type when we're supplying comparables.
And that sounds like a situation where we may need to do a different valuation. We could do
Precisely.
a PO or a full appraisal.
That's exactly one of the things that I think you'll see happen is that if there's an atypical property type or property characteristic, you'll see that the confidence score will reflect that. And likely it would be a case where you'll see the confidence score be a little bit lower. And that should be an indication that perhaps it's the time to switch to a different valuation method.
Yeah, that's good stuff. Good stuff.
I'd say, like, with our approach to FSD and confidence, we really seek to make sure that, we're only going to deliver an AVM if you can really rely on it. And the data indicates that you can truly rely on it. And sometimes, you could certainly get an AVM back and you look at the comps, you're like, these actually aren't the same property type. And those things do happen, right? But, we want to make sure that lenders and consumers get the right valuation for their scenario. And when an AVM makes sense, awesome. But we have appraisals for a reason, and that's kind of going back to the beginning. We need to use appraisers in those property scenarios that really warrant that additional analysis.
Okay. The question came in about disputes on an AVM, and if any of the information can be changed or revised to update the AVM's value or confidence score. Or is that something that would trigger over to, you need a full appraisal in that case if there's a dispute?
Dependent on, obviously we want to be able to solve the issue in the most timely and, cost-effective way. So we do suggest, forwarding any types of, disputes to our support team at Clear Capital is able to take a look at the information and, potentially find an error and adjust if there was a mismatch of the property data or there's, more updated information. So when you guys are seeing, something that looks, incorrect, please go ahead and forward it to our support team along with the PDF or the order, and we can take a look at it. The other thing that we can suggest is it could just be possible that that information isn't available to us. And in that case, it's another indication that likely there's another valuation product that's more suitable for that case.
Yeah, okay, good thoughts. I am seeing that there was a question out there about a specific property comps and instances where those homes didn't have actual good comparables. The homes were dissimilar. I'd encourage you in a situation like that, please reach out to, if you're a Coviance customer, reach out to your RM and let them work through that with you and try to get you good answers on that. If you're with Clear Capital, reach out to your representative there. We want to answer those questions for you, but that gets specific enough where it's probably not one that we can do here in the webinar. I'm not seeing any other questions. Well, one more just came in. So, just the general one. We haven't covered a lot of those in between products. We've talked mainly about full appraisals and then your AVMs, those in between products that, have that umbrella term of hybrids. And Dan, maybe this would be for you. Could you give just like I'll make it really hard on you, a 1 to 2 minute overview of that to just, whet their taste a little bit, give them a little bit of knowledge of what's out there. And then if they want more information, we can encourage them to connect with a representative from Coviance or Clear Capital.
Sure. So the space of hybrid appraisal has been evolving. So over the last decade plus or so, there's a number of companies that offer what I would describe as like a proprietary limited scope hybrid appraisal, where typically an exterior PCI is performed, and then a company has kind of a skinnied up version of an appraisal that they're trying to offer at a price point that's somewhere between a traditional appraisal and like a broker price opinion, for instance. So there's those that are like kind of geared towards home equity and are a little more niche in that respect. Separately, the GSEs and FHFA and those bodies have kind of formalized the 1004 hybrid, the 70H hybrid URAR appraisal forms that are used in your first lien origination, your GSE origination. They're still largely in pilot. They're not like in GSE seller guides. And those, similarly, rely on an inspection. They use what's called a property data collection, which is a very in-depth, rigorous kind of appraisal inspection. I haven't really seen much use of those types of hybrids in home equity. It really depends on getting investor acceptance of those. So there is this kind of range of hybrids. Clear Capital focuses most of our hybrid energy on the GSE side of it, where we're not actively doing the kind of limited scope hybrid appraisals that you'll see from some other companies.
That's good stuff, Dan. As a general rule, those hybrids tend to be a little less expensive than a full appraisal, which is part of the value. Yep. And they can be delivered a little quicker than a full appraisal, which is part of the value there. But there's a wide variety there of different kinds, different ways they do the valuation. There's a wide variety, and we can provide, again, we're going to email you after this webinar. If you have questions on those, we are happy to provide more information. Just respond to that email that we're going to be sending out. It'll be a joint email, and there'll be information in there from Clear Capital and Coviance. And if you have questions, reach out to one of those contact points. We're happy to answer anything you have about that. I think that's all the questions we're going to have time to answer today. If you have additional questions with more detail about the AVMs or specifics on that, we'd encourage you, again, reach out to Clear Capital through that follow-up email or your Coviance rep. We're happy to provide that information for you. I really appreciate you being with us here today. I hope you found this beneficial. And for any further questions, if you want to see a demo of the full Coviance platform or all the valuations that are offered by Clear Capital, we invite you to please reach out to us. We're here to help. So thank you so much for being here with us today, and please have a good rest of your day.